Personally, I see this as a 5 to 10 years long-term investment. The stock should deliver probably at least a double in the next 3-4 years, and I think it's a possible 4 or 5 times bagger in 10 years or so.
Everybody wants to buy a great company, but it's not often that you can find one trading at a cheap price. Today I'm talking to Ovidiu Voica, who's identified a promising young growth firm with an emerging moat trading at bargain levels. Even better, Ovi has significant experience in the industry, which gives him a unique ability to understand the company and its prospects. So sit back while Ovi introduces you to the company and walks you through his long thesis. And if you haven't already, make sure to take a moment and subscribe, because that's the best way to tell me to keep producing content like this. And now, Ovidiu Voica. So what opportunity have you found?
Today I'm talking about 11-Bit Studios. This is a Polish video game company. I think it's an early stage mode growing company that had some issues lately and we're about to recover in the next 1-2 years and continue growing. Personally, I see this as a 5 to 10 years long-term investment. The stock should deliver probably at least a double in the next 3-4 years, and I think it's a possible 4 or 5 times bagger in 10 years or so as the company keeps growing its portfolio of titles and its community of fans.
Interesting. So I haven't played video games for decades. I used to be a gamer when I was a kid, but kind of fell out of it. I know that it's extremely popular here in South Korea, but I've never actually heard about this company. Now, you've told me, off air, just in a private conversation, that it's actually an exceptional company and they just kind of floundered. So why don't you tell us just a little bit more about the business? What is 11-Bit Studios? This episode is brought to you by Event Driven Daily. If you're spending too much time trying to uncover special situation stocks, make sure to look at Event Driven Daily's Morning Brew newsletter. Each month, we scour the internet to find as many special situation opportunities as possible, and then send each and every special situation to free subscribers in a neatly packaged email. This service is absolutely free and will save you hours each month trying to source special situation ideas. Go to www.eventdrivendaily.com and look for the subscribe button at the top of the page. That's www.eventdrivendaily.com.
11-Bit Studios is a video game company. It's rather small right now. It's like its market cap is a little bit over $100 million. It's producing cross-platform video games and is selling cross-platform video games. And I think it's one of the best indie games, small to medium companies in Europe and Poland you can find right now. It has really good creative titles so far, and it's especially known for Frostpunk, which was kind of a disruptive and innovative title for the strategy games niche when it came out in 2018. I think it has real potential for growth. And the company has pretty much 3 segments, 3 divisions. The business, I would split its business in 3 divisions. Is the in-house development division, is the publishing division, and then is another division I'm going to talk about later on, which is not really a division, but it's like another piece of the business, which I think is important when you value the company. So talking about the operations kind of divisions related to this operating part of the business, in-house development, the company so far, we produced the following titles. This War of Mine was the first successful titles they were known about, and then they developed Frostpunk 1, which is the title I was talking about as being the main flagship for the company because they kind of disrupted the strategy game niche. And this happened in 2018. Since then, they followed up with Frostpunk 2 last year in September, which was also a successful title. And then pretty much last month, they released The Alters, the second serious and successful IP in the company's history, which is so far, together with Frostpunk 2, enjoying ratings on Metacritic of 8.5, which is pretty high ratings for such indie games companies. And then talking about the second division, the publishing division, they published so far 2 pretty successful games, Moonlighter and Children of Morta. But also they have other titles which were less successful than this. That's why they're not so important for us today, because the publishing division is like an extra on top of our development IPs, which are the main focus for us basically today. Talking on about a company, I'd like to tell you something about the general thesis I have about this company. So the company has a market cap, as I said, about $140 million. The company started very small and it grew a lot in the last 15 years. And the average compounding annual growth rate for the sales, operating cash flow, equity, and earnings per share until 2022 was above 20%, which is, I think it tells a lot about the rate of growth the company enjoyed until a couple of years ago. What happened though in the last 2 years is that the management kind of screwed up. They made some serious mistakes that affected the company profitability and the stock price. In 2024, the company had to cancel basically the third IP they had in house. They had to cancel Project 8. This is like the code name for this project. And they canceled it because it was way too ambitious in scope. Unfortunately, the management realized too late, after almost 4 years of development, if not more, that this project was actually not doable from a technical perspective. It was way too ambitious, and they had to write off 50 million zlotys. Zloty being the Polish currency, which is about $11 million or $12 billion. They had to write off the books.
That's quite a lot
Yeah,
on a market cap of like 130 million or something like
yeah.
that.
I mean, writing off 11 millions on a market cap of 130 million is quite a lot indeed. So the project was pretty big and was ambitious. You can see that into the capitalized development expenditures they had to write off basically from their balance sheet. So what happened is that in the same year, 2024, they released Frostpunk 2, which investors and everybody else was expecting to be a very successful title, which was. The problem is that the write-off pretty much erased all the profit that the Frostpunk 2 made in 2024. So we ended up with a final year, 2024, being pretty much break even. We made 6 billion zlotys of net profit, which was rather disappointing from a company which everybody was expecting north of 30 million zlotys of profits by then.
What's that US in US terms?
In
30
US,
million.
30 would be like, so it's almost four zlotys per US dollar. So it would be almost $8 million,
Okay.
around $8 million top profit they used to have in 2020, 2018, 2020. They made 37 million zlotys, so around $9 million in profit. So they used everybody with being very profitable. They had net margins of about 40%, a very profitable business, growing a lot, being very successful. And then suddenly they flopped. They screwed up pretty much with this write off of 50 million zlotys, like $12 million. They had to write off, and it came from nowhere like a wild card, which basically created a lot of uncertainty in the stock price. And a lot of these institutional investors, they went out of the business,
Hmm.
went out of the company, the stock. But I think what's happening since 2024 is that this year the company they released The Alters, the second major IP in the company's history. We sold so far 280,000 copies on PC and consoles, which is not a big number, thinking that Frostpunk 2 sold around 450,000 copies in the first month of the release.
Wow.
So this is like almost half of what Frostpunk 2 did. But Frostpunk 2 was an IP which was already established by the Frostpunk 1. So the community knew a lot about it and they had high expectations. Where The Alters is a new title that the community doesn't know yet what to do with it until they played it. And the game has quite great ratings. As I said, 8.5 on Metacritic, so it's enjoying high ratings from the critics. And the community is rather pleased with the game. And also, the game has to show that the game, The Alters I'm talking about right now, has 1 million active wishlists on Steam, which is great because this shows that through the word of mouth, gamers are hearing and listening to learning about this game, and it's going to produce more sales down the line. So it's going to be definitely a profitable IP for the business.
So it's basically is building up a little bit of a cult following this new game,
True.
and right, and so they could create a franchise out of it.
Yeah, I mean, what is really attractive about this company is that slowly uh, is building a bigger library of games,
Hmm.
which are all successful, and it shows consistency in the quality of the products they're producing. You know what I mean? So
Hmm.
they had This War of Mine, which was successful. Then they had the Frostpunk franchise with 1 and 2 successful as well with high ratings, and then they have The Alters, which is a completely different game, still very successful. And this is what I like to see in the company. If you look at the business on a 5 to 10 years base, you want to see consistency in the product, in the quality of products. And I see that, and I like that.
Any company can have kind of a one-hit wonder,
True.
and they could do a lot of big sales or something. But if you build an organization that is good at producing high quality content, you should see that consistency over time, right? So you should
Right.
have good release after good release. I mean, not all of them have to be home runs, but it sounds like this company has built up that in-house talent and kind of that culture to be able to produce them. And I'm just looking at the stock chart here. The run up in price has been just exceptional since about 2012.
True.
I think it goes from about 10 and then it hits 720 or something like that. So 10 PLN in 2012. And then by 2023, 720. So yeah, not a bad return there for anybody who got in early.
Right.
Obviously they hit a major snag. And if you're watching this on YouTube, you can probably see the chart here. Chart is down to about 2017 levels,
Yes.
and the stock sitting at about 190.
Right.
So quite a big drop from 720 in 2022. So their recent write-off, you said 10 million or 11 million dollars. Yeah, okay.
Yeah.
So basically ate up all their profit, over the last year or so. And what would their profit be without that write-off?
So basically, it would be around 50 million zlotys or PLN, or even more than that, because that's the amount that was written off. That would put a company, if you look on the numbers, you would see that on the income statement, you see that the revenue from 2012 to 2024 goes like this. So 2012 they sold for 3 million, then 415 of 27, 2018 they sold for 82 million, 2020 87. Then they didn't have any titles, so they made 70, 74, 52, and then they released another title, Frostpunk 2 in 2024, and they sold for 140 million, which is
Mhm.
record time ever, double pretty much the revenue in 2019 and 2021. And if you look at the income statement, you're going to see the same trend, like 1 million, 9 million, 12 millions, 47, 47, 28, and then boom, 6 million, back to lows in 2024 when it should have been around 50 million. So you would see like a rather very much growing trend if it wasn't for that write-off. But of course, you can't just brush it off because that was real money which they were lost on that production.
Absolutely.
You cannot reuse the assets. You cannot. I mean, you can reuse the experience, and you have a team of people or half a team because they got rid of half of the team for that project, which they grew in experience. But you don't get much out of that. This is the big negative event which is influencing the stock price right now, and this is exactly like you said, the reason for the crash happened in 2024, late 2024, early 2025. And this is
Mhm.
also our opportunity, I think, because I think the company is going to recover and continue the secular growth trend. It started already. Now, we're talking a lot about the growth. And I would like, if you allow me, to talk about the growth avenues that the company offers.
Yeah, go for it.
I think there are three growth avenues, and I'm going to describe them really fast. So when it comes to the growth trends, of course, it's rather difficult to see them due to the fact that a company has 4 year cycles of video game development. So you have like a peak at the end of the 4 year cycle development, especially with a company which is developing only one title. And then it's slowly, decreasing because the title is fading out in sales. But then the next title is coming out over 4 years. You have another slope and so on. But the beauty about this, which I love, is that the in-house development, IP development, is actually growing because the company started by developing only one IP at a time. When they were making This War of Mine and then Frostpunk 2, and then they moved to developing 2 to 3 IPs in the same time. Like Frostpunk 2 and The Alters, they were developed in the same time. They have two different dedicated teams working on two different titles right now. And they went too far with adding the third team with Project 8, which got canceled, like we saw. Because so after the Frostpunk 1, I think the management was overly enthusiastic and positive. They beat a bit more than they could chew,
Mhm.
and they went for 3 titles in development in the same time instead of one. And they had this major screw up with Project 8, which basically provides us today the opportunity of entering this growing company at a very low depressed price.
Right.
The second growth avenue I would like to point out is the publishing department, which had the company is publishing third-party video games from other companies, and obviously is taking a stake from the profits. And they had a couple of hits like Moonlighters and Children of Morta, but they also had some screw-ups, disappointing titles like Thaumaturge, Indica, not so much, in Creature of Eva, which lost money. So now they reset this department. So they're focusing more, their strategy was changed, and they're focusing more on quality titles and not quantity titles so much. So that should also provide us with a little bit of upside in the future. And then there is another point I'd like to underline here, that I think the third important element of growth for this company, which a lot of investors I think they ignore, is the fact that this company owns 40% in another video games company, which is called Fool's Theory.
Mm-hmm.
And now this company, Fool's Theory, is working on the remaking of The Witcher 1 in collaboration with CD Projekt Red. Now, if you know the video game industry, you know who CD Projekt Red is, and you know the Witcher franchise. So basically, the Witcher franchise is one of the best well-known RPG franchises in the video game history. And having this small company, Full Steer, working on the remaking of The Witcher 1 provides with a lot of upside potential for 11-bit through this 40% exposure into this company. If The Witcher 1 is going to be as successful as I think it will be in the next couple of years when it's going to release, and it's going to make quite a bit of money for Fool's Theory, is basically indirectly going to make quite a bit of money for 11-bit as well. So I think this also factors in when we calculate the value of this business later on. This is the third kind of element which provides growth potential for the company.
So did this former CEO get turfed then? Is there a new guy in charge?
Well, look, the situation is a bit more complicated when it comes to management of this company. I mean, they had a CEO before, it was Grzegorz Miechowski, on the period of successful, releases and so on with This War of Mine and Frostpunk 1. And then they changed the CEO to Przemysław Marszal. But you would say, all right, during his tenure as a CEO, there were a couple of bad things that happened, including the fact that they screwed up with the project 8. There was a bit of controversy, although it sold a lot with Frostpunk 2. They changed the DNA of the game in relation with the Frostpunk 1, which 1/3 of the community they already built out, they were not happy with. And they also made a couple of flops in the publishing division. So you say, okay, this CEO had 3 bads, he should go. But it's not so easy, because this is a small company. And this company was actually founded by 3 individuals. And these 3 individuals are Marshall, Miechowski, and another guy, Drozdowski. So these are 3 guys, which are 3 founders, and they're running the company together. So you cannot really blame only Marshall for this, flops lately and this problem. You cannot basically fire all 3 of them because they're the founders of the company. So I think it's just,
right.
They also own 15% of the company altogether. So you cannot fire them. They are the guys who made 11-bit successful as it is today, and they also made some mistakes. All you can do is hope that the management is going to learn the lesson and move on, which I think they will. So although Przemysław Marszal, he's the CEO, he's not ruling by himself. There's always, Miechowski, he's the chairman, and the other guy, Drozdowski, he's also part of the board. And I think all 3 of them, they take decisions together, regardless of the titles. So they're all 3 to blame, but also they're all 3 the guys who take the credit for all the success and the growth that 11-bit provided in the last 15 years, So yes, the management made some mistakes, like figuring out too late that project was too ambitious. They needed to cancel it. They also made some weak titles in the publishing divisions and lost money. But hopefully the management will learn from their mistakes and the company will move on more cautiously and more based on quality, not quantity in the future.
Yeah, that's the thing with founders, you can't get rid of them for better or worse. A lot of people like founder-led businesses where they have a big stake in the company. And, that's definitely true. But, the flip side is that if something goes wrong or they want to screw minority shareholders or something like that, you can't just get rid of them. Now, these guys have 15% of the business, you said, and they're also, responsible for building what turned out to be a fairly successful video game company. So, yeah, maybe we don't need new management to kind of take the company out of this hole that they're in. Now, in terms of strategy, you said that they were going to shift now from, producing a higher number of titles to producing, a smaller number of higher quality titles. Now, are they moving from 3 titles to 2 titles back to 1 title? How many titles can we expect them to be working on at one time?
They're definitely going to work on 2 titles right now because they have the Frostpunk franchise. They plan to actually make a Frostpunk 1 remake on the Unreal Engine. They used in-game proprietary engine for making the Frostpunk 1, but now they moved Frostpunk 2 on Unreal and they moved the Alters on Unreal Engine, which is a well-known international video game engine. very prolific and capable. And yes, they want to make a remake of Frostpunk 1, which should come out in 2027 or about that time. And then they're going to probably work on the newly created franchise on the Alters and make probably a new iteration of the Alters. So for sure, we're going to have at least 2 titles. But from their latest presentation, I think they're going to make 3 titles this time. But not the third title is not going to be so ambitious like Project A wanted to be, which wanted to be almost like a AAA game, where this company is actually pretty known for making AA games, like medium-sized games, not big franchises, where there's a different, type of competition,
Right.
different budgets, different development team we're talking about. So I would expect a lot, to come back to your question, I would expect to have somewhere around 2-3 titles for the future.
Okay.
Still, the company proved they can actually work on 2 titles simultaneously and provide good quality. I would expect them to be able to create 3 titles in the same time, as long as the scope of the titles are realistic, not too ambitious like Project A was.
Yeah, makes sense. And so I think, when we're getting back to profitability, you might see profitability back to 2019, 2020 kind of levels. Is that kind of what we can expect?
Right. So that would be the point I wanted to make about why I think personally, this is not investment advice. Of course, this is just a pointer and just it has a scope of informing people. If you're interested in, in the company or in the video game industry in general, you will know what to do if you do your research and make your own decisions. But in my perspective, I think this event that happened in 2024 provides us with a window of entry in this company at a decent margin of safety price, because I think starting from next year, we're going to see profitability recovering due to the fact that this year, Frostpunk 2 is still going to have sales, and they're going to release it on consoles because Frostpunk 2 was released only on PC last year. So we have to remember they're going to release Frostpunk 2 on consoles. They're going to make some money this year. And then you have the brand new release from Alters, which is pretty successful. It's not so widely successful as Frostpunk 2 in terms of sales, but still pretty consistent and successful. And although they only sold 280,000 copies on PC and consoles, we have to remember that the title came out on the subscription services, on Microsoft subscription services as well, Xbox Game Pass and PC Game Pass. And they gonna have royalties coming out from there as well, fattening up the bill, if you know what I mean, right? So we should expect a quite decent year from final year 2025 from this company. I would expect somewhere between 20 to 30 million zlotys in profit, which I think is going to reset the negativity that is in the market right now and move investors rather towards optimism back again. So next year, I'm not sure if we're going to see that opportunity in price that we see this year. So that would be my thesis regarding the price.
Okay, fair enough. So what do you think this company should be valued at right now?
In terms of valuation, I mean, given the company's historic growth rates until these late negative events in 2024, and the fact that it's planning to develop between 2 and 3 simultaneous titles, I estimated the intrinsic value of the company to be around 300 to 350 zlotys per share only for the in-house development and publishing business. But if you add that 40% ownership in Full Theory to this valuation, which we should add, given the fact that Full Theory is probably going to be much bigger and better in the the next 5 to 10 years, especially after developing this big remake, Witcher 1, you can easily get to a valuation, I think, of 350 to 400 zlotys per share for the whole business. So in-house development, publishing, plus this 40% ownership in the second business, right? Mm-hmm. I think a lot of investors oversee and dismiss this 40% ownership in Full Theory, which I think it's a mistake because it's another growth avenue for the business and it can add serious value to it. So all in all, I think that buying the shares now at under 20 zlotys per share should give the investor an almost 50% margin of safety to intrinsic value. So I think it's a reasonable price to buy in without being afraid of losing money in the next 3 to 5 years. If you're not interested in a 10 years perspective, at least in the next 3-5 years, I think reasonably you should get out a double and a half out of this company as a long-term play.
Yeah, I mean, from 190, I think it is now, to 400. That's a solid double. So can't complain about that.
Yeah.
Now, what's the balance sheet like? Are they loaded up with debt?
The company has quite a bit of cash on their books and very little debt. So the debt to tangible book value ratio is 6%. So very low debt when it comes to that. And the total debt is around 6 million zlotys, while the cash and equivalents sit at 70 million zlotys. So it's less than 10% debt to cash and equivalents. So I think it's a very safe play out there. They don't like taking much debt. They like to grow organically, and they make enough cash flow in order to invest in their own IPs without
Mhm.
exterior capital. So I think that's also a fair amount of security right there for not losing money.
So this company, obviously, the balance sheet looks pretty solid. 70 million in cash versus 6 in debt. They can they can pay that over 11 times or something like that. So no bankruptcy risk there. Now, why do you think this company has a moat? So you were saying that, just in a private one-on-one chat with me, that this company has a strong competitive advantage. Why do you think that?
I think the company has a moat they're working on. I don't think it's a strong competitive advantage right now. It's still a small company.
Mhm.
In order to develop like a strong, fully mature moat, it takes a lot more time, and you have to go to grow to a bigger market size, I think, than they are right now. But I think the company's moat is so far is simply the brand they're building in the video game industry. It's not a fully developed and mature moat, like I said, yet, as the company still works on its brand and growing its fan base, but has come a long way, and I think there's a high chance it will keep developing it. The fan base and the community value is growing bigger, provides strength to this in development mode. The company makes some very unique and high quality games that they have very original DNA, and they had built a niche on its own in the video game market, which players appreciate. So they have their own piece of pie, a piece of the pie in the video game market. It's not a big slice; it's a small slice. But I think as the company develops and produces more titles to their library of games, this pie is going to only grow and enlarge, and is going to provide and assure a future of growth for the company. Now, talking about the quality of the titles which are going and fitting into that brand mode, I'm talking about Frostpunk 2 last year. They won the Game Awards 2024 for the strategy in the strategy game department. And they also won the Best Gameplay Award in the Gamescom in 2024. So they have two very powerful titles under their belt already. While Creature of Ava, one of the publishing titles, won Games for Impact Award at Gamescom 2024. So they are associated with games which are already winning prizes and at a big level. You know what I mean? So that means the company is fixed and is focused on providing quality and focused on quality. And this only tells me the company is very serious about building a powerful brand, a strong brand in the video game industry, which is exactly what we as value investors looking for moat companies are looking for.
Yeah, absolutely. I mean, I think back to when I was a kid playing video games, and one of the companies that stands out, I mean, there's EA Games, EA Sports, but there's also Blizzard, right? So you
Right.
have you have these companies that develop a reputation for developing, extraordinary games that a lot of people like. And so if you build that brand, that is a moat because people look for your games. They get excited about your games. But even more than that, it's really about the franchise, right?
Right. Yeah, it's very important to have good quality titles, creating these franchises, which they get a piece of the mind share of the community and of the users. So, in terms of building franchises, I think it's important for the company to growing a library of these franchises. They are building a library of franchises which are mostly focused on themes like survival, post-apocalyptic, and morally challenging actions and decisions. And I think this is going to attract a very specific type of audience, gamers which are looking for that type of games. And the company is going to specialize in that type of games and themes. So we can expect, I think, bigger and bolder games in the future from the company because the company is growing its team of developers. And also these developers, as they produce titles, they get more experienced and more the talent is developing more. So
Right.
I feel positive overall about the company. I see it grow And I like to see it making more technologically challenging titles like the Alters was, because the other titles they were orthographic titles, video games. You would see them in a 2D plane, and the gameplay would happen to a 2D plane.
Hmm.
Like this game, this War of Mine was a 2D framework, while Frostpunk 2 was a 3D framework. Being a strategy game was still happening in a 2D plane because you're building basically a city in a 2D plane.
Hmm.
But now they moved into the Alters, which this title actually makes me very optimistic about the company because we're talking about 3D animations, third-person characters, dialogues, a more complex story, a bit of action and adventure happening in there. With 3D characters, you see them and you manipulate them, you move them, and so on, which is a step further away from the type of games they used to make. And this tells me a lot about the company's capacity
Hmm.
in the future because I see further development and more potential from this company to making bigger titles and more complex titles. And if they keep this DNA of survival, post-apocalyptic, and morally challenging decision making, and they mix it with this more complex technical side, they can produce some very, very interesting titles in the future.
Now, one thing I always like to look at is insider buys, share buybacks, that sort of thing. I know that we've mentioned a couple times that management or the founders own about 15% of the company. Has anybody been purchasing shares from the company, or has the company been buying back shares?
About that, I think the manager were buying shares in 2024 after the crash started, and they bought until December to a certain point. They bought back. I mean, they were not buying back shares; they were just insider ownership. They were buying shares on the market from their own money, basically.
Right.
But since December, there is no other reports about manager buying shares anymore. While about buybacks, this company does not have a policy of buying back shares. Their policy is to reinvest the capital back into the business. They're interested in growing the company, not really into providing yet dividends to shareholders. I think it's pretty understandable
Right.
if you deal with a business model which is, visibly growing and has potential for growth.
So, who exactly was buying the shares? Was that one of the founders, or
There are multiple directors and founders in there, so it's not only one person or something. So
okay,
I
was
think
it a lot of shares?
there were small chunks, but for their income, I think it was quite meaningful.
Oh, okay, interesting.
Uh, it's hard for me to go now and look on the Warsaw Stock Exchange for the details, to be honest.
Hmm.
I just don't pay so much attention to this, in my opinion.
Okay.
I know it's important, but when I look at this company, I'm not. I mean, it's just like a trading trigger
Hmm.
if you're interested in trading short term. But if I look big picture, long term, this company had managers. I mean, the managers they were buying, selling. It's very hard to make something out of it.
Right, right. Yeah, I don't know. I come from the net world, and every company looks like it's going to die totally and completely. So that's
I
what really
know.
got me into looking at,
Yeah,
buybacks and insider buys. If the CEO is buying, but the company looks like it's going to die, then probably there's better times ahead. But I guess if you get into, these larger, kind of more successful companies, these better firms, probably it doesn't matter as much. This episode is brought to you by NetNet Hunter, the best resource for NetNet stock investing on the internet. NetNets, or cigar butts, are sub-liquidation value stocks that produced such outstanding returns during Ben Graham's lifetime that he gave up all other strategies to focus on them. Professionals such as Warren Buffett and Joel Greenblatt also launched their career on the strategy, and that proved quite successful to say the least. Right now, you can get a free monthly NetNet stock pick from NetNet Hunter's free newsletter. Visit www.netnethunter.com and look for the link on the homepage.
well, I know a fair bit about the net world as well, right? Because I'm
NetNet Hunter member, yeah.
yeah, and read your book, and yeah, I still have to read your second book. So I read the Benjamin Graham Netnext Stocks strategy, but I still don't read. I think that important one, the 25 essential Korean foods. I have to read that. I'm pretty sure there's a lot of wisdom about investing in there.
Yeah, well,
But
there
I
is quite
promise I'll do it
yeah.
at a certain moment. At a certain moment in time, I'm going to do that. But I think that's master level of investing, so I'm afraid of doing it.
Yeah, the Korean food's definitely
Yeah,
master level. It's really spicy content in that one.
I'm pretty
Uh,
sure it is.
If you made it
Yeah,
this far through the video, definitely don't look that up on Amazon and pay me $2 for the book. Definitely don't do that. So,
yeah. If this is not advertising and it's not spending your money advice.
right,
Yeah,
right.
right.
So, what's the realistic downside? If this whole thing doesn't work out and we end up losing money on it, what's the realistic downside here?
Well, the downside is, I mean, if the management botches the next game releases, and you visibly see that, or if their next titles sell just very few copies, for that means the company is going into a small niche of users, and they will not make that much money as expected after all. So I think these two dangers are the ones for the company. Management continuing screwing up titles on release, like it happened with Project 8. But it didn't happen with Frostpunk 2 and the Alters, on the other hand. So, it's very hard to say if it was a one off or is going to keep happening. So, you don't want to see that again, right? If you see another project cancellation or another major issues with big budget projects, big budgets related to their capital power, then that's a red flag. And
Right.
also, you have to watch out that a company doesn't, I think, in my opinion, this is the biggest threat for the company. You have to watch out that a company doesn't go too much into too original, too weird, too specific kind of titles, which are only appealing for a very small niche of users. That means it will never come out of there into real commercially, fruitful projects. So you want to see more commercially fruitful projects which are appealing to a broader spectrum of gamers rather than very specialized, niche, kind of mature existential problems and philosophical question kind of. They do tend to have a little bit of this in the Alters, to be honest.
Mm.
And I think this is one of the reasons they didn't sell as much as Frostpunk 2, because they went a bit too much, too heavy into this existential, philosophical question, psychological, morally challenging decisions and so on. Too much dialogue, maybe. Not enough action and
People
gameplay.
just want to shoot stuff.
Yeah, just want to have fun to a certain moment, but there is
Right.
definitely a chunk of gamers out there who would definitely enjoy that. So it's still a solid result, I think, for Alters, and there's more to come. But this is one thing I would watch out for. You wouldn't want to stay too many years in a company that is slowly moving in a different direction that you would expect it to be.
Yeah, absolutely. Not a lot of people know this about me, but I actually got my start in special situations when I was about 13 or 14 years old, and it was in video games. My mom was a homemaker, so she didn't have a job. She was just taking care of three kids, and we weren't always the best kids. So one time she got really, really pissed off. I don't know what we did. I probably did something. It was probably me, but she she went on strike for the family, and she wouldn't cook for us, wouldn't clean for us, wouldn't drive us to school. And so, or she would drive us to school, not home. She wouldn't pick us up though. So after school, I would have to take the bus home, but the bus wouldn't go directly home. It would go to the mall, and then I'd
All
have to
right.
wait for an hour, catch a separate bus, and take that home. And so I was walking around the mall one day, and I happened upon Kmart, and I saw a big sale. So I kind of ducked my head. I was a teenager. Nobody liked going into Kmart at the time. It was kind of where the losers went in. So I was making sure nobody saw me going there, but I snuck in there. And in the back of the store was the video game section. So, 13 years old. Of course, I go straight there, and they have a giant sale there, 90% off video
Mm,
games. And so I
nice.
couldn't believe what I was seeing. And I asked the lady at the counter, I'm like, is this really 90% off? And she's like, oh no, we forgot to change the sign. It's not 90% off, it's 95% off. So I almost died right there. I loaded up on games because I knew that across the street was a little shop called Willow Video. So I loaded up on games, bought as many as I could. I walked across the street, and I sold them for like three times what I bought them for. So I just did that a few times, and I made so much money. And
Nice.
bust home super late at night, told my family about it, and that day my mom, she knew she was defeated. She had to she couldn't just let me go to the mall anymore unsupervised. It wasn't much of a punishment. So yeah, that was my start in special situations. How did you get into investing?
Well, I got into investing rather late, to be honest. I mean, until 6 years ago, I think I had no idea, not even how stocks work, how you could buy a stock. I had no idea whatsoever what a broker was, nothing. So I was working. I think it's important to specify this to people that I have quite a bit of experience as working as a developer in the video game industry. It's not a accident that I'm talking about this company today. A video game company, obviously. Now you also have to be careful because I might be biased a little bit because I worked in the video game industry in Poland. This is a Polish video game industry. That's why it attracted my attention. I have a high regard for the Polish video game industry development world. I think Polish people are very capable when it comes to video games, and I think CD Projekt Red with Witcher and Cyberpunk they already proved that, and they have quite a developed industry in video games out there in Poland. So this is one of the reasons why I actually, recommend Polish video games companies because I know that Polish people are very competitive when it comes to this and very capable. When it comes to how I got into investing, basically I was working with this big Polish video game company. I saved some money over the years, and I started having the question, like many people have, like how can I make this money work for me, provide me some extra income, like some interest rate or something. So I started buying some books about investing, how to invest your money. So I stumbled upon Benjamin Graham with The Intelligent Investor. I picked it up. It was definitely too complex and too sophisticated for me at the start. So I gave up. And then I started slowly reading about the greats, Buffett and Munger, and how they did it. I started with some light books, and then I stumbled about Phil Towns' books. He has 3 books. Rule 1, Investing, Payback Time, and the third book is in collaboration with his daughter, Invested. These are 3 great books if you're interested into the mode investing, which is the late Buffett style investing, mode company investing, which is the company we're talking about today, the type of company we're talking about today. After reading those books, in 2020, just when the big crash happened and Corona and so on, I took a 1-year course with Phil's. He has a course, so I took a 1-year course about investing with Phil. And I didn't make much of the stock crash because I was in the middle of the course. I was still not sure what to pick, what to buy, where's my circle of competence exactly. Anyway, I bought some, but very little to make a real profit. And then 2 years later in 2022, I decided to move away from a full-time job and try to use some of my savings to invest more of my time into this almost full-time if I can do that, So this is what I'm doing right now for the last 2.5 years. I'm trying to do this full-time. So far, to be honest, with mixed results. I made some mistakes because I strayed away from Buffett's path. I went into some trading speculative things as well, which I shouldn't have done, but now I realize that. And 2 years ago, I also discovered your book, the Benjamin Graham NetNet style, where you describe pretty much everything about the early Buffett investing style and Benjamin Graham investing style, which I was wondering while reading about Buffett, like, wait a minute, this guy didn't start with more companies, which are so hard to find and scarce. He started with small cap, in the Buffett partnerships he talks about small cap, NetNet and cigar butts. So I started getting interested in that. And after reading your book, I started reading more books about NetNets and cigar butts. And here we are today with 2 strategies, the mode strategy, late Buffett strategy, and the early Buffett partnership strategy, trying to use them both, which proves to be a challenge sometimes because
It is.
yeah, I'm not sure if it's
Definitely.
actually not a mistake not to focus on either on one strategy or the other and go 100% in with all your portfolio in one strategy. We'll see about that, but I'm still not decided.
Well, the holy grail to net investing and probably moat investing as well is being able to pick up a company that has a very strong competitive advantage, a durable moat that has a growth trajectory, going forward at a price below its net current asset value. So
That's the
if you
holy
can do
grail.
that,
That's the
that is
holy
the
grail of investing in general.
absolutely, absolutely. And the last one that I can think about was Tiffany's. And that's when Peter Cundall bought Tiffany's. It was trading below liquidation value. It wasn't, I don't think it was a net, but he figured out the liquidation value was trading at a massive discount. And then, of course, it just went up to the moon over 20, 30 years or something like that. So yeah, it can be done. It's very, very rare to do it. But one of the reason why I like special situations actually is because they can offer up those type of companies at rock bottom prices. So that kind of got me into special situations. Well, I shouldn't say got me into special situations because I was doing that with net nets, always looking for an edge with net nets. If I can find, some sort of catalyst or something on the horizon that tells me that the net's going to work out. And, those are all special situations. So, yeah, interesting.
I mean, if you think about it, Monish Fabrai was doing it a lot. I mean, he was always he was on the prowl for this type of companies all his life until he started, built up such a big net worth and such a big portfolio cash load with his investing fund that he had to start looking for compounders because you can't just place so many hundreds of millions into small cap companies anymore.
Right.
He was looking for special situations, like you say, in India, Turkey, still like emerging markets. He's very courageous when it comes to that, And he was making all kind of wild bets where he could find growing companies, neglected growing companies, selling way below liquidation value. And he's doing this right now in offshore drilling. If you watch his portfolio, he has, I think, at least two companies which are selling below what he thinks is the replacement cost, and they provide growth opportunity. He's looking in all kind of. I like very much. I mean, I'm a big fan of Monish Fabrai's, like many others, of course.
Yeah,
he's one of the greats. But yes, it's definitely doable, though it's very risky because you have to have a very compelling and deep circle of competence, and you need to be careful, what you're doing. If you make mistakes, then of course, your capital is going to suffer. So this is the big catch, I think, with moat companies.
Yeah.
I might think that 11-bit has a moat or is in the process of building a moat, but maybe it's not. So you have to constantly watch them and see, all right, I made my double, all right? The company was definitely cheap. I made my double. Let's say in 4 years' time, you make your double. 11 bits is at 400, right? You bought at 200. But you have to look and realistically think, okay, now what? Is this really the company that's going to grow and make me 4 or 5 baggers in the next 5 years or 7 years or so? Or is this was just a medium-term play when I got my double, I got my money, I should just move on? You have to be realistic and you have to be, honest with your circle of competence. Do you understand the business and the competition in that business and that industry good enough in order to decide, okay, this is a compounder. I'm going to leave my money for the next 30 years in it because it's definitely going to make me a lot of money. Or it was a one-off. You made your double. It was just a situation and you should move on to the next situation, opportunity.
So if people want to connect with you, want to talk to you about what stocks you're looking at right now, where should they go?
I think I'm not a guy who's like very exposed to internet or social media, to be honest. I mean, if you are really into this type of situations, I think you can find me on both Evan's blogs and platforms, both Net Hunter and Event Driven Daily. So that's where you can find me. We can talk and we'll discuss opportunities and exchange ideas.
Awesome. Thanks a lot.
Yeah, thank you too for having me, Evan. It was a pleasure.